Welcome to TradeFX Club.
The Japanese yen is under pressure once again, trading near a two-week low against a broadly stronger US dollar. The dip in the yen comes as optimism around US-China trade talks boosts global risk sentiment, leading investors to move away from traditional safe haven assets like the yen. Meanwhile, a slight uptick in the US dollar is helping to support the USD-JPY pair, which is hovering close to the 145.00 level. However, the upside for the dollar-yen pair seems limited. That's because there are growing expectations that the Bank of Japan might raise interest rates again this year, especially with Japan showing signs of inflation and a smaller than expected economic contraction.
In contrast, the U.S. Federal Reserve is likely to cut rates in 2025, creating a divergence in policy that could keep the yen from falling too far. Investors are also reacting to recent court decisions in the U.S. regarding former President Trump's tariffs, adding an extra layer of caution to the markets. Still, the positive momentum from U.S.-China trade discussions is driving risk-on sentiment. Both sides have agreed on a trade framework, which has helped ease tensions and strengthen the U.S. dollar further. Friday's non-farm payrolls report from the U.S. showed a stronger-than-expected labor market, which caused traders to dial back expectations of near-term Fed rate cuts. However, markets are still factoring in some easing by the end of the year. The next major event in focus is the U.S. Consumer Price Index report, which could influence how soon the Fed might act. On the technical front, the USD-JPY pair looks poised to break higher if it can clear the 145.30 level, with potential to test 146.00 and beyond. But if it slips below the 144.00 mark, that could shift the momentum in favor of the yen and pull prices lower toward the 143.00 zone. Thanks for watching TradeFX Club. If you found this update helpful, make sure to subscribe and stay tuned for the latest in Forex trends and global market insights.